company and individuals to help you make decisions that will prove profitable. And it's always my aim to always do the best for the client. So my services are client-centered. I believe in business relationships, not merely transactions where we just do one deal and we're off to the next one. This is about doing right for the individual who's placing their valuable funds into an investment, and also for their family and their community. So I take that very seriously. I've been in the business over 30 years. I did my first real estate transaction in the early 1980s, 1981. And I am a licensed realtor today, and I've had my license about 8 years. And the reason I have my license now is because my attorney kept telling me to get my license. But before that, I ran private investment opportunities across the country. And then last year, I had the pleasure to work and begin working with Ace Capital Group. Ace Capital Group, as Kishore has said, has been around over 35 years. It's actually been in place over 35 years. And what they do is they identify land, and either they own it or they buy it and hold it through installments and have exclusive rights to that land. And then they make that land available to investors, typically below market, anywhere from 10 to 55% below market. And that's just kind of an overview. And what I'd like to do is today is discuss with each of you the opportunities. Why invest in land? And it makes sense to a lot of us, but why in California? So that's the second kind of sub-question. And what are the details that make land valuable going into the future? Why land versus rental incomes or income properties as an alternative investment for you and your clients? It could be an individual standalone investment, or you can add it to your portfolio of investments so that you have a diverse portfolio. And then how do you participate to benefit from the acquisition of the land? And what if you were to act today versus later? And feel free to ask questions. I'll do my best to answer them. If Kishore, you could help me. If people ask the questions in the chat, I'll be happy to respond to them now or in the future at a time when there's more specific questions. If any of you have individual questions that you want to discuss about land banking or 2 or 3 of the parcels that I present today, I'll be happy to work with you one-on-one, offline, or I can work with you as a group. I'll look for Kishore to give me direction on that, so I can work through him and with you to achieve your investment outcomes. So with that, I'll begin. Ace Capital Group, as I said, has been in business over 30 years, and we offer premium California land investment opportunities in California. And what we do is make sure that when you work with us, I am your point of contact. So what you see before you there are the 2 telephone numbers that you can reach me. One is at the office, and you also have my email there, and you have my mobile number. At the end of the session, I'll present another alternative real estate number for all of you to use as well. So make note of these, because these are active phone numbers, but I just updated the last slide just before we started. And I posted a new phone number for you to use for all real estate activities, whether they're Ace Capital, or if you have any question regarding 1031 exchanges, or if you need a referral to something like that, I'll make that available through Kishore, because investments can be made with 1031 exchange funds. So I'm offering you a direct number at the end of the presentation. So with that, as Kishore mentioned, we've been in business over 30 years, and what we do is we have over 4 decades of experience. And collectively, if I took everybody in the office with Mr. and Mrs. Wang, who founded the company, they have been doing this for 40 years, and they've made millions of dollars for themselves and for other people. And what we do collectively is find land in the path of development, so that you can benefit from the increase in value, in asset appreciation. So we find those. We have 6 people looking 24/7 for these opportunities. I look for them myself. And once we do all the research for those parcels, we acquire them and we clean them off of any headaches. So there's no land, there's no liens, there's no taxable situations that are going to surprise you. You get a free and simple grant deed and title insurance for the parcel. So if you go out and buy this at an auction yourself, then you would have to be responsible for doing all that work and making sure that when you bought the land at auction, or you bought it from a trust sale or somewhere else, that it was clean. We do all of that. We also have a compliance team internally to make sure that every one of our transactions complies with every state and federal regulation involving real estate. And once you become a client with ACE Capital Group, we offer you a comprehensive customer service for every single land transaction and parcel that you're involved in. If people want to buy land together, we facilitate that process, and we offer you a mechanism so that 2 to 4 people can work together to buy a single parcel of land that might be worth more and more valuable than if they bought it individually and they don't have the funds to do it. So you could bring a team of people together, or we can help you pull other people together. And at the end, really what boils down to is if we do our job and we take care of our customers, then we earn an A+ rating with the BBB, with the Better Business Bureau. And we've had that since 1994. So it's valuable work that we do. We don't take it lightly. We're serious. We're very serious about our business. And we're very serious about giving you the best opportunity to create appreciation in your investment. So understanding that every one of you, you and your clients, have to decide what to do with your money when you invest it, and for different needs. You can have a need for buying a home. You may have a need to fund a college tuition now or in the future. You may want it for grandchildren. That's what I do when I look at land. What am I going to buy now that I can leave for my grandchildren? My children don't want it, and I don't want them to have it, so I want to make sure it passes on to the grandchildren because they have their own plans. And I want to make sure that they have the opportunity to cash it out at some point for a home or for college, or if they hold it long enough, for possibly for their retirement. Some people buy land and hold it and let it appreciate over time so that they use it as a hedge against long-term care and healthcare dollars that are needed in the future. So we all recognize that everybody has to be financially prepared for the different stages in their life. And each of those is unique. So we asked, where is your money parked now? And is it working to provide you that opportunity? And when we look at land, we look at this very time-tested principle of supply and demand. Typically, when you see land values going up over time, this is what you see from left to right. You see undeveloped land not having a great appreciation in value. But as you move from left to right, you see pre-developed land. This is land that has zone, that is usually in the path of growth, that is part of some master plan in some community where agencies are involved, and there's a lot of economic factors that lead to asset appreciation. And then the developed land section here, this last one here, and I'll call it out, is where people end up most of the time. With ACE, we want you to work with us to get started early in the game so that you buy closer to where we buy in the low area, just as land goes from undeveloped to pre-developed land. And then you can ride that asset appreciation up over time so that you sell it just before someone wants to build on it. Someone wants to build on it or build houses or schools or apartments or retail commercial or industrial or manufacturing centers. So, or it's in the path of growth where a freeway or a train is going to go, a high-speed rail, and I can talk to you more about that. And those are just little keys to think about. Now, today, most of you, when you do invest in properties, will buy land that's already developed, that has already built-in higher costs. You have the undeveloped costs of the raw land. Then you have the increase in value that someone held it before you got it. And then you have the cost of construction of everything that's above ground. And the profit at that point becomes a variable function of demand and in the state of the condition of that house, building, or entity, whatever that structure is on that land. But the cost is fairly high compared to the other two. So most of us, if you buy a parcel, if you buy an investment income property, most of us will look at a 7 to 15 year break-even point, and you borrow money, a lot more money than you put down to get that property. So if you buy, say, a rental home, you have to come up with anywhere between 20, 30, 50% of the cost of that investment. And then you take the rest of it with a debt instrument, a liability that you have to service. You also take on the management and the responsibility of keeping that income property in a state that can always create revenue through renting. And you have all those costs on there. You're actively involved in that. So when that becomes too expensive, people turn around and say, well, I can't buy that $1 million property or $2 million or $3 million property that we have here in the Bay Area, or in your neighborhood when you're hitting the upper end, or you're trying to stretch the dollars and leverage the dollars, and you don't have the time. Many of you and many investors are working professionals, and they don't have the time to manage that property and that investment regularly and frequently. So that takes work. So they pivot, and then they go to, let me get some other land that I don't spend a lot of money on, and because I don't want to put it all, and I don't want any debt. And then they go get undeveloped land. This type of undeveloped land is what I call raw land. Raw land we can find all over the country. This is land that may come into play sometime in the future. It may not be part of a master plan. A lot of it is zoned agricultural use. There may be some mining, there may be some grazing, there may be some kind of rights for wind power or oil use on it. And you have to identify those and be very good at identifying them in order to create a profit substantial enough that it warrants buying undeveloped land. So what we ask you to do is consider buying land in the center area where we know that it's zoned for some future use and it's part of a master plan, where you have the opportunity for the greatest asset appreciation over time on the investment that is slightly more than undeveloped land, and definitely a lot less than buying developed land. And these are parcels that I'll present to you, and I'll give you 3 examples of this at the end of this presentation. And so think about this statement: don't wait to buy land. Buy land and wait. I can tell you hundreds of stories, including my own, that where I bought land, if I'd have bought land 30 years ago, I would have seen appreciation beyond my imagination. Just here in the Bay Area alone, 1 square foot of land in San Jose last summer sold for $535 per square foot. Let me let that sink in. $535 per square foot. A company with a lot of money bought 6.3 acres at that amount. And for those of you, well, how many feet in an acre? There's 43,560 square feet in an acre. So do the math. It was a huge number. And so they bought that land, and there was a knockdown house on there. And they have to build a 17 to 20 story structure using tax credits in order so that the above ground development warrants and makes the land usable because they paid so much for it. So and I would say, and I know with certainty, that 30 years ago, 10 years ago, and even 5 years ago, that land was substantially less than $535 a foot. And you can see the same things in your neighborhood, and all you need to do is check your tax bill. The tax bill will show you what the land value is versus what's built on the land. And the land value will continue to go up. And you can always scrape off what's built on the land and increase the value, but the land value will always go up over time. It may not rise 2, 3, 4, 5%. It may rise 9, 10, 12%. And in the Antelope Valley, just put a pin in this. In the Antelope Valley from 1994 to 2012, the annual rate of return on land range between 24% to 30% per year. And I'll explain why that happens in that area. So don't wait to buy land. Buy land and wait is our mantra to think about. Now, the reason we look at land is these are 10 key factors that we look at for land to have the potential to increase over time. It has to be usable. There has to be water. And when I mean usable, it has to be easy to build on. The easier to build on, the more attractive the land is. A lot of people, a lot of companies are building in the hillsides and in the mountains because it's affordable for now. But then is it usable with respect to water and utilities being there? It makes it difficult. So it's always a good idea to get level usable land. And then you have to, wherever you are, if there isn't enough water, you can't build. So we make sure that there's water delivery systems in place to sustain the growth that's planned for the area. It has to be accessible. If you can't get to it, businesses won't go there, schools won't go there, and communities won't get built there. And it has to have the utilities to sustain growth, and not just simple growth, but massive growth. And we can look at data that'll show what the projected growth is going to be. And then once you have that, you need some things for the families. And typically the first thing that anyone looks when they buy a home is, what's the school district? So if you don't have educational programs and schools going up, and universities and state schools and community colleges going in or expanding in an area, it usually doesn't bode well for that community. So we look at the 1 through 5, and then we look at something else that's important. You want this land to be close to a major metropolitan area that is growing, that has a high economic engine attached to it, because it creates a demand for people to be there. It creates a demand for business to be there. It creates a demand for housing to be there. And then you look in that same area and search for prime growth industries. Are they in place? Are they retracting? Are they expanding? And then we look for the same thing for, is there commercial and residential development going on? Has it been there in the past? And what is the forecast for the future? And forecasting for the future, we look at 9 and 10. 9 will tell us from the government, from the databases, from the Census Bureau, from the state finance departments, from the IRS, from all of those places that we look at to see whether they're projecting growth or not. And this is what all the big companies do. And the other thing too is when we look at prime growth industries and we see who's there, we know that some of these companies spend millions of dollars forecasting what's going to be happening in the next 2 to 5 to 10 years so that they can put stores and businesses in there. So we look at all this together, and then we look at number 10. Number 10 is a regional master plan for community and municipal infrastructure. Many people and developers, and I was a developer, and I acquired commercial and residential land, raw land. I zoned it because I knew growth was coming, which is very high risk. And then I built on it, which is even higher risk. But I always looked at what was the community plan. If I bought land that was going to be used for residential purposes, I wanted to be certain that I would not have a junkyard allowed next to me or a refinery allowed next to me. But if I was going to do a manufacturing facility, I wouldn't mind if a refinery was next to me, because that meant that I was in a like type community and it wasn't a conflict. So we look at regional master plans to give a baseline beachfront away so that you're not surprised that your land is going to be used for the future. You know what's coming in around you. So we look at these 10 items together and we say, where has this happened? Where is it going to happen? And is it going to happen again? And when you look at these 10 factors, they create the ideal land investment parcels. And in Southern California, where Mr. and Mrs. Wang, the owners of Ace Capital, started doing by buying a couple of hundred acres for $10,000 per acre many, many years ago. And they ended up getting 5.5 times what they paid for it in a matter of 4 years, because they knew where the freeway was going. They knew where the off-ramps were going. They knew where the malls were going, and they knew where the housing was going. And they realized this because they had looked at all these factors. So we apply that same approach And we ask, has this happened before in Southern California? And the answer is yes. This is the San Fernando Valley, which is just north of downtown Los Angeles. It's about 20 to 30 minutes north of downtown Los Angeles. This is where Burbank is. This is where Universal Studios is. And this area is there. And the land planners had projected a population in this area of 975,000 people from the forefront all the way to the mountains in the background that you see here. See, these mountains are kind of the limiting factor. You can see housing going up, but they don't go into the mountains because it's very difficult to get water there and utilities there. So this is level, usable land with water and connectivity to a nearby city. So it had all those. So would you expect that there was growth in the area? And the answer is yes. The current population is in excess of 1.8 million people today, and it continues to grow. In this photograph, in this shot, you can see some green space. And then, did this happen somewhere else in Southern California? The answer is yes. It happened in Orange County. And if you look at this area, Orange County, you see a lot less green open space because the density you would expect to be higher. Those of you that have ever traveled to Southern California and driven to Disneyland will know how dense this is because you get stuck in traffic. It ties you up from Los Angeles to San Diego. That drive in the afternoon can take up to 3.5 to 4 hours. So if you look at the houses, if you look at all this development, this happened on open agricultural land that someone zoned and someone held on to and let people develop. The mountain range you see in the background is also the mountain range connected to the San Fernando Valley. So that's a barrier for development. And on the west side is the ocean. To the north is downtown Los Angeles, where it's very difficult to find land banking opportunities where you're paying premium dollars for land. So when we look at Orange County, you see 1.5 million people were planned for this area. Today, it's over 3.2 million people and growing. Did it happen somewhere else in Southern California? Yes, it happened in San Diego, where San Diego had projected in the county to have 1.8 million people, and today it's over 3.6 million people. And the densities are going up. And there's not a lot of open land in these three areas. This is Southern California. And when we look at California as a whole, we discover that in California, if we just look in the LA region, the LA downtown region, the 60-mile radius from downtown Los Angeles, we find that over 50% of all the people who live in California live in this area. That's over 20 million people. The population of California is right around 43 million. And over half the people live in this area. And it's already congested. And they're expecting another 3. I'm projecting another 5 million people here in the next 20 years, if not sooner. And this data that we posted here comes not from ACE and not from me. It comes from the U.S. Bureau of Labor Statistics, the Census, and Gray Hill Advisors from a study that was done in 2017. And we'll update that. This is important because this is the economic engine. When you have $1 trillion per year, a $1.2 trillion economy in this area alone, that makes it a substantial draw and a demand for business and housing. And then we have a limited supply because the immediate areas around Los Angeles have built out already and are getting very expensive. The same thing happened in San Francisco. But in San Francisco, if I took San Francisco and the entire Bay Area and I connected it to Sacramento to the west and the cities in between, we would only capture 21% of the population of California. So the LA Basin has more people creating more demand and more money than the Bay Area. And so keep that in mind. This is the economic engine that drives demand in the area. So if you look at all this, where are they going? They have to run. They can't run to the west because the ocean is there. You can't build in the ocean. So they're running over the San Gabriel Mountains north on Highway 14 and I-5 to Palmdale and Lancaster. And we see a lot of that evidence. If you head south into Santa Ana and Costa Mesa and Huntington Beach and Laguna Beach and San Clemente, that's all Orange County. It's already built out. And the commute from Oceanside and San Marcos and those places into downtown Los Angeles is close to 3 hours by drive time. To the east, you have the same thing in Riverside and San Bernardino County, where that growth took place as well. And to north of downtown Los Angeles, that whole valley is built out. Yeah, you can find a pocket here and a pocket there, but you have to be really good at finding good deals. The greater deals is getting in front of the path of development, which is to the north, over the San Gabriel Mountains into the Antelope Valley. And we're looking at 2 cities up there where we have land holdings in Lancaster and Palmdale. And when you look at this, are we the only ones that see the growth? When we look at population growth in North LA County, and we project out to 2030, which is 11 to 12 years from now, you're seeing over almost 200% growth in population. And that's greater than all the areas that it compares to in the area. That's significant. What if I could tell you what that translates into in terms of housing projected growth? That's valuable information. This is what we know about. So when you look at this, say, what does that mean in terms of housing build out? Well, here's what we know. Home construction is projected to grow over 200% from 2000 to 2030. And I can tell you it's ahead of that right now because there's still building going on. And remember that between 2000 and 2015, we ran into some economic problems. The mortgage meltdown and all the real estate stuff and the collapse in the financial industries. Today, we have recovered from that in that area in California. And you see that in other parts of the US. If you look in your neighborhoods and your communities, you've seen recovery. But it's really based on demand and where do people want to live? And a lot of people want to live in Southern California. Now this data, if you look at the bottom of this chart, is not ACE Capital data and it's not Lou Zimmerly data. This comes from governmental agencies and third parties. So we look at that and we monitor that. Like other builders and developers, we want to make sure that we're providing those builders, developers, and investors an opportunity to stay ahead of market demand. Now, I mentioned to you earlier that in the Antelope Valley, land appreciated annually 24 to 30% per year between 1994 and 2012. And consider that we had the stock market crash, the dot-com crash, with a financial crisis, and we had the global recession that carried through in some places through 2012 and 2014. And the average holding time for people that had land, not houses, not buildings, not that, but the land on which houses and buildings are built on, that land went up 24 to 30% per year. That's a huge number. So I ask people, please, please, please temper that number and lower your expectations. And don't think for one moment you're going to absolutely get 20 to 30% return on your investment. There are no guarantees in any of these. There are some places that will guarantee you 4 to 8% per year, and it's a limited instrument, and there's some risk involved. There's always risk involved whenever you invest in anything, including real estate. But when we look at performance, and I see performance of 24 to 30%, and people have validated that. This was a study, and Kishore, remind me in an email, I will send you that study in a compressed file, and you can share it with everybody on this so they can read it themselves and do the analysis themselves. And specifically, there's pages 3 and 4 of this document that I'll send you that explains how they did this study. But I ask you to consider cutting that in half and lowering it a little to making it really 8 to 12% per year. That's where you want to build your expectation. And if you do that, and you double the holding time of 3 to 3.7 years, and you make that 8 years, we are competing, land competes as a viable investment opportunity in a passive non-management, non-activity, non-depreciation manner. It competes very well with income property. And you can get into purchasing this land at a lot lower number than trying to buy a house or a building. And if you get a return of 7, 8, 9, 10, 12% in a year, and you hold it for 8 years, you're very likely to see a doubling of your investment. You're going to see asset appreciation. And every parcel that we present, we present below market. So we bought it below market, we've cleaned it up, we've investigated it, and then ACE makes it available to its clients through people like your organization and your investors, so they can buy it, hold it, and either use it themselves or sell it in the future, and at an increased price. And if you work with us and buy land with us, we tell you every year, if you want to check the valuation, we will do a value assessment of that and let you know in writing what we find. But this number is real, and people have seen increases. Now, why is it the best choice if you buy land? Well, you own the land outright. It's fee simple, free and clear of all encumbrances. It's held in your name. You're not getting a fractionalized debt instrument or some investment product or a fractional share. You own a grant deed and title insurance to the land, just like if you're to pay off your home or your buildings that you own. There are no management fees, headaches, or ongoing maintenance or expense with land ownership. No toilets, no tenants, no trash. The only thing that you would be responsible for annually would be the real estate property taxes. And in California, because of Proposition 13 that was passed in the 70s, you can forecast that your property, your real estate property taxes, will almost never, ever increase beyond 2% of the purchase price of the land. Now, if you transfer that land or you sell it, it gets reassessed. If you don't transfer it and you don't sell it, you're merely paying 2% of the acquisition price. So if you buy a parcel of land for $100,000, you're looking at no more than $2,000 per year. And if there's any question about that, we provide you a detailed property profile in which we tell you and we show you what the property taxes are today and any special bonds or anything on there, and you can do the calculation, and we can do it with you to forecast what your taxes will likely be in the next 5 years, 7 years, 10 years. So every year, so that you know what your cost is to hold this land. That's the fee. Those of you that may use rollover self-directed IRA funds, which are usable, you have an annual cost that you have to sustain for that self-directed IRA. That's the fee. That's the other fee, if you will, or the expense that you would incur. Also keep in mind that when you buy land in California, so long as you pay the taxes on it, and you make sure that if you get a notice because someone says, hey, you've got some trash on it, you call us and we'll work with you to get that trash off of there, then you really don't have any obligation to build on it, none. So you want to hold it for 2 years, 5 years, 10 years, 20 years, 30 years, 40 years, you can do that. You don't have to build on it. What I would say is, you want to put a for sale sign on there or put a for sale online somewhere at some point when you feel that you want to sell it, so that someone can call you and say, hey, I want your land. How much do you want for it? And then you have a set price in your head that you want to sell it for. So keep in mind, this is a passive investment opportunity to own land with a future purpose that has an upside for asset appreciation. And are we the only ones out there? Here's a guy that's invested out there $2.5 billion in a 5 square mile active PV solar project. He bet that there would be 1 million people out there, 250,000 homes. He has a purchase power agreement with 2 electrical companies out there, suppliers in Southern California. That's a smart man that's done wise investments. And he's out there making a ton of money. And there's another 70 to 80 of renewable energy projects in that area. So that's a growing, emerging market. And in California, we're going to have legislation passing here pretty quickly that we're going to have 100% of all new power coming online is coming from renewable sources. And the Antelope Valley is positioned to create that. So this is a perfect opportunity to see where smart money went into play. Then you look at something else. Last year, Northrop Grumman, which is in the Antelope Valley, in Palmdale, received an $80 billion defense contract. This is an economic boom. Consider what would happen in your city, in your community, if $80 billion were given to an entity that is in your community. There would be job creation, there would be creation for contracting and creation for retail, for services, for dry cleaning, for food, for apartments, for cars, for Uber, for Lyft, for road maintenance, for schools, for technology connections. And that's exactly what's happening in Palmdale and Lancaster right now. And this is not going to be the last thing that they get. Now, is Northrop Grumman the only one out there? No. Boeing is out there. So is Lockheed Martin. So is the Edwards Air Force Base, where they landed the shuttles. Virgin Galactic Air is out there. So you see an aerospace industry in Palmdale that most people don't know about. Engineers, technical people, laborers, manufacturers, specialty manufacturers, and defense contractors are out there. And they create a demand for jobs and housing. So you've got public money going in with defense dollars, and you got private money going in from someone like Warren Buffett creating an opportunity for a whole industry to grow up and mature. Then we look at what's happening in the area. Well, you got new hotels going in. Yeah, these were some of the other ones. And now we have a Holiday Inn being redone and Elements by Westin. This is one of the new premier products that we're putting out there. There's a new convention center planned close to this one, and the Embassy Suites that's just down the road from this one. Home number 2 by Hilton just went up a quarter mile away from the Elements. So these are all indicators that business is going there and travel is going there. And then we look for one more. I look for this company to come in because it says 8, so I apologize. I know there's 7. There's a planned 8th one, and I don't know where it is, so I cannot confirm that. But take my certainty of 100% that there are 7 Walmart sites going into this area. And 4 of them are supercenters. And for each supercenter in that community, it is designed to accommodate 250,000 customers. So when you saw the projected growth, it was less than 1 million people. But you've got Warren Buffett betting on 1 million people, and you've got Walmart betting on 1 million people. You've got the hotels going in. You've got Home Depot, you've got a Costco, and you've got houses going in. You've got a convention center going in. And then you have 4 major medical facilities going in, already up and running. One of them is a trauma center that does work also with the USC School of Medicine, the Keck School of Medicine. And 2 wellness centers going up there that are accommodating people that have quality of life issues that they want to address because they're elderly. You see all this happening in a community of less than 400,000 people that will very likely be over 1 million people by 2020 or 2025. And if that weren't enough, you look at what else is going on. Well, I'm happy to announce, and it's all over the newspaper, that there's a new freeway going in. The newest freeway plan for California is going in connecting Palmdale to Victorville. Palmdale is in the Antelope Valley. And then and also along the same route is a new development. It's called Brightline, and it's going to be connecting by high-speed rail, connecting Palmdale to Las Vegas. So, and then if you look a little more closely in the upper left-hand corner of this graphic here, you see the California high-speed rail. The high-speed rail is going to connect San Francisco to Los Angeles by high-speed rail. And there are over 19 active construction sites between Palmdale and San Francisco right now building out the high-speed rail. And the hub has already been identified, that the land has been acquired for the high-speed rail to connect to the high-speed train to Las Vegas. And it's also going to be the hub for the high desert corridor. Now, if you fly into Burbank right now, to Burbank Airport, you can walk through the airport, walk past the parking lots, walk past the car rental places, and step onto a light rail train, Metrolink, and it takes you from Burbank to Palmdale. And commuters use that now, and the commute time is anywhere between 50 minutes to an hour and 20 minutes without traffic. So they're not stuck on the highway. So they get into town using Metrolink. When the high-speed rail comes in, that commute time is going to be cut to 25 minutes. And the commute time from San Francisco to Anaheim is promised, and it's contracted to be at 3 hours and 25 minutes. And the commute time from Palmdale to Las Vegas, 1 hour and 45 minutes by train. So that drive time, by the way, for some of you that want to know how long does it take to drive right now, about 3.5 to 4.5 hours from Palmdale to Las Vegas, because the roadways are not expanded. Now, the high desert corridor, what's important to know is valuable land is always found along the path of highways and speed trains, high speed trains. You want to find land near there. And if you can find it, you find it because you know where it's going. For us, hopefully this place, I'm going to play a video, and this shows you where it is going. This is they're already beginning to acquire the land in the path of this highway, and the high-speed rail is going to parallel the highway. This video is going to show you where the off-ramps are going to be located. So what ACE did is we have land holdings near the 50th Street off-ramp, and we've had holdings in front of it until we recently sold them over the last 6 months. And we're trying to get more in front of them because now we know where it's going. So bear with me while it plays through. Kishore, can you see it and hear it?
Yeah, no.
Yeah, so I'm going to stop it when it gets part of the way through here, but you can see the overall layout for the area. The green line is what we're looking at, and it's going to pull it up. So that's Highway 14. It is going through Palmdale. There's Sierra Highway, the high-speed rail line. 20th Street is coming up. 30th Street will be another off-ramp. And then there'll be another one at 50th Street. And it's right here, right in this area. ACE has multiple holdings of residential and commercial land that it's going to make available to its clients and customers. And this line goes all the way out. So what I want to do is I want to go beyond it, and let me page down to the next one, because this is a 7-minute video and I don't want to chew it all up. So let's see if I can move on here. Up, down, okay. Now, how do you take advantage of this information and take advantage of buying parcels of land? Well, number one, you can use cash. Always you can use cash. You can use IRA 401k or 403b money that you had somewhere else. You can roll over into self-directed IRAs. Anything that is a qualified dollar that you can put into a self-directed mechanism can be used to purchase land. You can use funds from 1031 exchanges. Many people think that if you have income property, you can only exchange it for income property. That is not true. You can exchange it for anything that is deemed an investment real estate property. So real estate to real estate. The key thing is, don't try and flip it within the first 2 years. Then it's not considered a true like for like. And we can get into the details about that. For anybody that has specific questions, I can refer you to a 1031 exchange specialist that handles 1031 exchange funds all over the US. And if you want to buy a parcel of land, we offer you the opportunity to secure it without getting into a bidding war. And we send you a reservation form, which is a 2-page option to purchase, where you supply a 3% deposit for the parcel, and it's yours exclusively for 5 calendar days. I will work with each of you so that we can extend that to give you a little bit more time on a case-by-case basis. And I will give you a lot of data in advance of you making that commitment. If if you buy if you reserve a parcel of land and you want to see it, then I can arrange to see you there if we have a reservation form and a deposit. The deposit is 3% of the purchase price. So typically, right now I get asked, well, how much do I have to put in? What's the minimum? The minimum amount of money is the amount of money that it costs for our least expensive asking price on a parcel. And today that number is around $15,800. And even if you wanted to split that, two of you could split that in half. And you could buy that parcel or reserve it if you wanted to do that. And do we have parcels for residential use? Yes. Do we have parcels for retail commercial use? Yes. Do we have parcels for manufacturing centers? Yes. Do we have parcels for apartments? Yes. We want to match your investment interest with the type of property that we have available. And this way we can help you rescue and revive any retirement funds by making this investment part of your investment portfolio. And when you do this, if you want to work together, we have tenants in common agreement that lets you buy a larger parcel of land by working together in groups. And each of you have an undivided interest in the land. And I can go into more details and I can show you draft versions of the tenants in common if you wish to do that. But the key here is, if Kishore and I and my roommate here in the Bay Area, where I work Monday through Friday, and I live in another area in Sacramento, but I'm here Monday through Friday. If the three of us went in to buy land and Kishore was 50% owner and my friend here was 25%, and my friend was 30% and I was 20, our interests would be 50%, 30%, and 20%. And we would share in the profits that way. And we would share in the taxes that way. And ACE would advise us every year of what our portion of the taxes are before the taxes are due. Remember, again, the taxes are 2% of the purchase price. And ACE will send you a notice of what's actually due. And the taxes are due on December 10th and April 10th of every year. And the county of Los Angeles sends out notices, and so does ACE, so that you know that you need to pay for that property tax. So we can get into the details on the tenants in common and what we call the CC&Rs to make that work. If a group of you want to buy a parcel of land, work with me and Kishore to make that happen. Now, I told you that this is an investment opportunity. So I'm asking you, this is not a get-rich-quick scheme. It is not. It never will be. If you want to flip houses and take that risk, I'd be happy to help you, but that's not what ACE does. We buy land we know that's in the path of growth, that's going to appreciate over time. And then I take, for every parcel that I present to you, I take an additional extra opportunity to scan it to make sure that there's a value built in that when you buy it. Because you're only really going to make a profit when you buy a parcel of land or a house. You make it on the buy. Not on the sale necessarily, but if you buy at the right price, you have built-in equity or you have asset in there that you can count on. And it'll grow over time. And you have to be patient. As I said, 3 to 5 years. So those of you that have clients and those of you that are thinking of investing, here's the takeaway. We need to know 3 things. Number 1, how long are you committed to placing dollars into this investment? If you're committed to anything less than 2 years, this is likely not the investment you want to take advantage of. That window's too short to really show that we're working and that this investment is working for you. 3, possibly, if we find the right parcel that is ready and mature. And we can do that. 5, yes. 7, absolutely. 10, even better. And so if you're like me, I am turning 60 next year. I'm not necessarily looking at a 10-year window for me, but I'm certainly looking for a 10-year window for my 10-year-old grandchildren and my 3-year-old grandchild. And I can buy that land and put it in their name into a trust, and they become the owners of it. And it's my way of giving them something in advance that they have in the future that they can sell, and I can gift it. And there's no tax consequence for gifting it. And I can put it in a trust for them. So it really has to fit with what your investment profile is and your investment timing. So how long are you willing to keep your investment in there? And then how much? What is the minimum amount of money that you're willing to put in to that investment for that period of time that you just decided you were willing to do? The minimum, not the maximum, but the minimum. Because I will try and match that minimum to that parcel to fit in that time frame. The third question is, how fast can you move those funds? Some of you may be selling a business, a house, or something else, or real estate, or you may be waiting something to mature. If we know when those funds are available, we can match you with a parcel more quickly because our parcels will sell. If I know that you're looking at 2 or 3 months down the road, I'll keep advising you when something comes up that meets the profile that you ask about. But I always try and get it to match up as quickly as possible. When you fill out a reservation form and you send it to me and you give me a copy of a check, the deposit check of 3%, ACE holds that parcel for you. It lets nobody else bid on it. And then you have 5 calendar days minimum, and I'll try and extend that to 7 to 10 calendar days, or if you're making the visit to the day that you visit, and you give us a go or no-go sign. If you decide in that review refundable period, your deposit is 100% refundable to you. You don't lose anything. You lose your time, my energy, your energy. But you found out something that would or would not work for you. If you decide you want to go forward, then we ask you, can we cash this and make it a non-refundable deposit? We get an affirmative, and then we work with you to set a closing date with those funds that you'll have available. Typically, we can close within 30 days. We've closed as quickly as 17 days, and we did that even on the 1031 exchange. And we typically close in about 21 days when self-directed IRA money is involved, and we work internally with you and your third-party administrator to help you roll over those funds to make them cash so that you can place them into a purchase that will be held in your name as a benefit under a third-party trust. That's a lot of information in a short period of time. What we want to do is make sure that your funds, if they're qualified funds, stay qualified funds. So we can get into the details about that. But this is not a get-rich-quick scheme or strategy. This is building wealth over time. So keep that in mind as you go forward. My name, again, is Lou Zimmerly. I'm the Director of Sales at ACE Capital Group. This is the cellular number that you can call me on, 818-281-3528. That is my number for every real estate question with ACE Capital or anything else I can help you with. And my email there is lzimmerly@acecapitalgroup.com. And it's an honor and a privilege to talk to you. And Kishore, do I have time to present land parcels?
Sure, Lou. Yeah.
Okay, then I'll go ahead and I'll go quickly through these. They all follow the same format. So I'm exiting from this and I'll share my screen here in a moment. Let me see if I can get into a new share. Let's start with, let me see if I can open all of these. Here's a small parcel. Can you see that? Or
Yeah, we can see it.
perfect. It's a small parcel, and let's see if I can open it up to this one. This parcel is on the northwest upper end of Lancaster in a rural community. Yeah, it looks like it's out in the middle of nowhere. It is. It's out in the desert. Now, interestingly, you have an airfield out there for private planes. You have rural development in the area. This parcel, interestingly, is a small parcel of 2.1 acres offered for $27,300, and you can build one house on 2 acres. Now, the most valuable part about this, because it's out in the desert, it really is, but there is water on the site. And here's the thing, we're offering it for less than $32,000, less than everything else that's being asked for in the area. So this is an opportunity to buy when the market is asking for more money. And what can you build on it? Generally single family custom built homes on 2-acre lots are in the area. You can have horses, you can have some animal uses, not all animal uses. You can't have a slaughterhouse or anything like that on there, but you can have horses and chickens and other animals like that. The road, I've been on this road, even in a sedan, it is drivable. Most people out there are out there on trucks or other vehicles because they want to keep it like that for a little bit, but there is a paved major road you can use to get to it. Highway 138 is 2 miles to the south. Highway 138 runs east and west, and it connects to Interstate 5, which is the major interstate traveling north and south of California's north and south. And this highway is going to be expanded in the next 20 years. So it's going to be a major highway connecting to Highway 14 and then connecting to the high desert corridor that we saw in the video going out to Victorville and going that way. So this is the western half of that highway. Now, when you look at this, you're thinking, well, you know, there's not much out there. What's being built? Is it worth it? And again, here, I want to point out this last bullet point, second to the last. There is water on the site. I've actually gone out and taken pictures of where the water is on the lot to be sure it was out there. And you look at this here, this is where it is, and you don't see much out there. But let me get a little closer shot. You still don't see anything but this is what you see built within eyesight of this property. These houses range from $300,000 to $500,000. Custom built homes. This is where people go out and build something, and over time they green it up and they make it their little oasis in the state away from downtown Los Angeles. Some people live out here and work out here, and they travel from time to time into the LA Basin. And here are the comps. So when we look at this, this is something that's given to you in our property profile, which is a large PDF file of about 50 to 60 pages that I send to every person who's interested to purchase a property. We send that to you as part of our due diligence with all the disclosures. In that property profile, we give you the disclosures. Is this area a land, is this a flood area? That's disclosed. In this one, it is not. Is it a fire hazard? No, it's not. Is it an earthquake zone? No, it's not. Is there a hazardous substance in the soil? No, there is not. Is there water on site? Yes, all that's disclosed in the property disclosure. And we also give you the comps, asking, pendings, and solds. When we look at this parcel we're asking $13,582 per acre. The parcel next to it is asking 33. Another one is 18. Another one is 12. Another one is 15. Another one is 19. Another one is 8. So when we do our analysis, and I would recommend you do the same thing, is throw out the high and throw out the low and average the rest, and you'll get a good example of what the value is of land in that area. And that's what we do here. And I'll do that as well on every parcel. So that's the first one. Let me share another one, which is going to be a little more dense in terms of development. And let me see here. I have to move down. Here's one. Let me share this one. And let me plug myself into power here so I don't lose you. This parcel, you can see, is more mature. This parcel, you can see there's a lot more development. And if you look at this picture very closely, you can see development going in that direction. So when you, so this parcel is near downtown Lancaster. It's not out in the desert. You can see development all around it. You see a middle school. This is a high desert regional health center run by the Los Angeles County Health Department. You see high schools. This is the downtown area, City Hall. You see a baseball stadium out here. You have IMAX theaters out here. You have the Superior Courts down here. You have other schools. Challenger Way is a major thoroughfare. So this is in the path of growth. This is development. These are single family residential lots. So we're asking, it's 5 acres. We're asking $245,000, which is roughly per gross acre, it's less than $50,000. And you can build 7,000 square foot lots. So one house on 7,000 square foot lot. So a builder would go in there and you can put roughly, I calculated 32 homes to 33 homes. It's not exactly 7 because of the setbacks and streets and curb gutter and sidewalk. But this one is way below market because we got it at a great price. We're over 60% below asking in the area. And we're on a thoroughfare that's only going to get improved and widened like the other part of it that is on there. You're close to all those areas I told you about, and it has access to electricity, telephone, and water on the street. It's near major areas. It's near Sierra Highway where the high-speed railway is going to go. You got schools nearby. There's pharmacies. There's all sorts. There's parks. It's basically a mature area. And when we look at this, that's where it's located. You say, how far is it from the schools? Well, this is what it looks like from north to south, actually from east to west. And then what do the comps look like? Well, when we try and find something like this of this size, it's very difficult to find it. But you can see the nearest parcel is asking for $119,000 per acre. But if we cut that in half, we're just about where we are. And then this will be disclosed to you if you're interested. And then again, these parcels are available on a limited basis until someone makes an offer. They'll go off the deck immediately, and I can't show them to you again. So I have one more, and I'll wrap it up with this one. This one I found most intriguing because it is a light manufacturing area. And let's see if I can find it here. Come on, scroll down. There we go. When I saw this one, I thought, this is crazy. It's out in the middle of nowhere. And I had a big giant S on my shirt. Not for silly, stupid, or smart, but for skeptic. You look at this and you say, Lou, why are you even showing it to us when it's so far away from all of this? I'm showing it to you because it's near a logistics type center. You have Michael's distribution center. You have Rite Aid's distribution center. You have a major fairground. And this whole area up here is a specific plan area for college, for like technical campus use in the future. And this happens to be on a major roadway with utilities on it. And you're thinking, okay, well, why even further? Well, it's 40 acres, net 39.24. ACE is asking roughly $20,000 per acre. And we're asking for $784,800. That's a lot of money. That's roughly $20,000 per acre. And if you look at this picture, you see where the Cinemark is. This facility here, where my cursor is, and you can, I don't know if you can see it. Can you see that, Kishore, moving around?
Yep.
Right here is a Veterans Administration building already up and open that's run by the state and the federal government on 8 acres, fully built out. In this area, just north of it, there are 470 single-family units, townhomes, going up, already 80% built out for veterans. There's a parcel of land down here, 10 acres, zoned retail commercial, where they're asking for $140,000 per acre for retail commercial. There's a parcel over here, right next to this, where they're asking for $120,000 per acre because it's in here. This one is $20,000 per acre. And then I take it one step further. How below market is this? Well, this is substantially below market. This is 35%. That number is wrong. I did additional studies on it. And this is what's nearby. It's an 8,000 acre master plan industrial complex, ideal for business that want to do facilities, that want to do warehouses, for light industrial, administrative, high tech, any number of uses. And with the recent legislation that happened in California that allows cannabis use, this area allows for all 4 tiers of cannabis business to occur in this area. So cannabis buyers are going in there to open their warehouse and distribution centers. That doesn't mean that you have to do that, but they're driving the market. Now, how much are they driving it? Because you can fly materials in and out of there, or you can fly them out of there. This thing is on it's on a paved roadway that's going to be 100 feet wide right now, and it's 1 mile away from that highway that I said that's going to that connects I-5 with the city. Now, you have residential neighborhoods not too far away, and you have comparable land in the area selling for $30,000 per acre. How close is that comparable land? There's a parcel here for 5 acres where my cursor is moving around on a dirt road, to the north of it that touches this parcel that sold for $31,000 an acre earlier this year. There's a 10 acre parcel over here that sold for $30,000 an acre that sold earlier this year. There are 2 parcels over here, landlocked, that sold for $27,000 and $29,000 per acre. There's 2 parcels here, one 5 acre and one 2.5 acre, that sold. One sold for $46,000 per acre, and the other one sold for $52,000 per acre, just down the road from this parcel. Those are some pretty good numbers. That's why I'm presenting it to you, even though it feels and it looks like it's out in the middle of nowhere, because it's a value buy now. If someone were to buy this, my advice to them is buy it for $20,000. Let's stick a for sale sign on it immediately and sell it for, put a asking price of $35,000 on there, right on the property, put it online, put it on MLS, put it out everywhere, and fish for a buyer, and let me and my other people that I know that I can refer to you to buy this land from you, the investors, for $35,000 to $30,000 an acre, and make that happen within the next 12, 24, or 36 months. And you think about that for a moment. If you buy for 20 and you sell for 30, I believe that's a 50% return on your money, isn't it? It is. If you divide that by 2 years, you're looking at a 25% per year return. If you do it for 3 years, you're over 15%, which fits the profile that I talked about earlier, annualized 20 to 30%. But I'm telling you, if you're patient, you're looking at 8 to 10%, 12%, 15% per year.
One of the members is asking, like, what are the nearest airports to this location?
The nearest airport is a major regional airport that is part of the Los Angeles World Airport. It is not used for passenger air traffic yet, but it is part of the LA World Airport. It's the Palmdale Regional Airport. The closest commercial airline passenger airport is in Burbank. It's about 45 minutes to an hour away from this site, from the site we're pointing to. But if you want to fly in and out of this port, private aircraft do it all the time. And you can fly in and out of the regional airport, but you have to get permission in advance. The next one that you can get to, LAX, is about 2.5 hours away in regular traffic. In terms of distance, it's 60 miles, 65 miles away, but traffic is horrendous. If you drive another 85 miles, you can get to Ontario Airport in 1 hour and 20 minutes on average, even in traffic. So that's the nearest airport. But in terms of logistics, you have 3 airports in the area that can work for logistic purposes. And you're going to have the high-speed rail near here. And you're going to have a highway This is E Street, West E. The next one is D as in David. That's also Highway 138 that connects to I-5. So those are the three that I have. We have other parcels. And by the way, I forgot this was here. This is what's nearby. Everything you see here is no more than 1.5 miles away. This is what you see. That's what's built there. Not being built. That's what's built there. So I forgot we put that in there in the last presentation. And here are the comps. And those were the old ones. They haven't updated it on this sheet. You can see down here the distribution centers. Remember that parcel I was showing you that was infilled? It's right about here, if I were to pull it up on a map. But this here, this is where the Veterans Administration is. This is a youth detention center. Okay, have you heard of Beezer Homes, Kishore? Beezer Homes, production home, single family residential. They're right here. And these homes are 2,400 square foot homes that start at $420,000 for a 4-bedroom, 3-bath, 2,400 square foot, 1-story home. And they go up from there. They're right here. The prices start going up. So when you see the comps here, you're looking at anywhere between $18,000 to $60,000 per acre to $50,000 per acre. Again, if you want to know anything about this, contact me through Kishore or directly and let me know that you were on this conference call in the Zoom video with Kishore and me. That way I can connect you for any future services through HGI and its associates, because that's how I met you and you met me. And we work closely together with all the associates in investing in real estate in the Antelope Valley. I'm going to guess that some of you will ask, do you have land banking opportunities outside of the Antelope Valley? Is that one of the questions you have, Kishore?
Yeah, Luke.
I get that question all the time. ACE does not, but if you're interested, with full disclosure, I can refer you to other people, but that is not the agreement between ACE and HGI. So I don't necessarily get compensated for that work, and neither does Kishore, as I understand it. But I don't want to speak for other people. I can tell you that I can refer it out, and if there's something there to benefit you, and that's the only thing you want, then I will do my best to refer it out in an area that you find attractive. I work as a real estate agent, salesperson in California. I'm licensed to do so. I'm not licensed to do that in other states, but I have relationships with just about agents in every state. But let's see, I don't have anybody I work with in Alaska. And otherwise, that's it. I've got agents and associates in every other state. So other questions, Kishore, that I can answer?
Yeah, there are majority of the members are from Texas. So they are asking like, do you have something in Texas?
Yeah, actually, I can refer you to a couple of people in Texas. And for those of you in Texas, I actually did a development. And I had 4 land holdings just south of Austin and Kyle. And I held land. I practiced what I preached. I went in there to develop it at a bad time. I closed a sale in 2006, and I borrowed money to build in February of 2008. Can you imagine that, when the market was crashing? And I held on to the land. I paid $76 per square foot, 76 cents per square foot. And I sold for a blended amount of $4.55 a foot 10 years later. So I can refer you out to other people in Texas if you want to pursue that, but I cannot talk about this or make any kind of offering on ACE Capital time, because I am the director of sales for ACE Capital.
But I understand, like in California, the land is limited, so there is huge population increase. So
yes, let me add to that. And I'm sorry for cutting you off. You drive an excellent point. Years ago, I did a study that looked at land values across the country, county by county. So when I looked at, if a house was selling for $100,000 in Texas, and a similar house, you know, when you match up the statistics, $100,000 in California, just in general, the value of the land in Texas did not get higher than 9%. So the expense, that $100,000 of that house, $90,000 was the house. The land value was $10,000. In California, the average for the last 30, 40 years, since 1975, when the data came in, from 1975 through the second quarter of 2014, I pulled all this data together through the University of Wisconsin School of Real Estate. The average for California land is 55% is the value of the property. So a $100,000 house, the value of that $100,000 house in California, the land is $50,000 to $55,000. So, and if you look at increases, the rate of increase in California land is higher than just about any other place in the U.S. And in LA, even more so. So it's an opportunity to get ahead of that with a fairly reasonable entry level point. And I say that because trying to do the same thing in San Francisco gets very, very, very expensive. There are a couple opportunities, but they're scarce, and you have to act extremely quickly with money ready to go. Other questions?
Yeah, again, similar question, like, do you have something in Atlanta or in Georgia State?
Yes, and I can tell you, I can point to those to you at a later date offline, because I'm on ACE time and they pay my salary and my benefits and my commissions. Yes, but there's someone sent me a project in north of Atlanta, and I believe it's still available. And I can send that out to your group. If you want to connect with them, I'll certainly do that. And there was someone there that some of you might have met in Atlanta. Her name is Cheryl Bursley. She's the one that has a direct connection with the people that have that opportunity. So you would work through her, not through me. But I can definitely connect you on those. I don't want to lose your business, but more than that, I want to make sure that I'm providing you valuable information. And I'll tell you this, if I am working on it, I'm going to make sure that I turn over every rock and every potential downside and present it to you. For me, it's not about the upside. It's about managing the downside so that you get a value that you can depend on.
Cool. Thanks, Lou. The next question is, like, does Ace Capital charge closing fees, and how much is it for each parcel?
Yes, closing fees are not going to be more than, typically on a $100,000 parcel, the closing fees are about $1,100. That includes a title insurance and all the escrow fees. So it's not significant. So if you're thinking of costs, think of 1.5%, and it's usually less than that.
Cool. Once purchased, say for 10 years, how do you manage or keep the property under observation?
You call ACE or you call me and say, hey, do you have somebody that's going down there or someone on the ground? Go take a look at my parcel and make sure nobody's sitting on it, building on it, living on it, dumping on it, or doing anything to it or growing anything on it. And if there is, then we work with you to kick them off. Because anywhere in the country, if someone sits on your land, uninterrupted, unmolested, without you saying, get off my land formally, with a written notice and serving it to them, they stay on it for 5 years unmolested, they get what they call prescriptive rights to that land, and they could become the owners of the land. So absolutely, that's a fantastic question. We always check it. Do you need to buy insurance for the land? No. If it catches on fire, nothing's going to burn because there's no structures. So do you have to buy insurance for liability in California? Typically, no, because you just stick a sign on it that says, enter at your own risk, do not trespass. You're liable. It's same kind of thing like in Texas. If you stick a no trespassing sign in Texas, anybody that hurts themselves on there, it's their problem. And in fact, you might be able to sue them.
Mm-hmm. And
Other questions?
do we need to pay something for that, like for the
Nope.
support ACE is doing?
Nope. You say, hey, I'm your customer. Go look and see if there's anything on my property. If you tell us you want to stick a sign on there, then we say, okay, here are the 3 sign builders that we use. Pick one and we'll make it happen. If you say, look, I want to put up a fence around it, we ask you what kind of fence. And we tell you the fence builders. And so we do that so that you can manage any dumping. And removal of trash and stuff like that, we can coordinate with other things that we do out there. If we're removing trash from one of our parcels, we can usually add on to that at a nominal fee or no fee. That's something that we take on a case-by-case basis.
Next question is, if I had to buy a parcel and sell it, how soon can I expect to get it to sell? Am I stuck until it is sold, or does ACE buys back?
ACE does not buy back. Let me answer that. I talked to Mr. and Mrs. Wang at length today, and they made it 100% clear. You do not want ACE buying it back. ACE is in the business of pushing prices down so that we can get you a good deal. You don't want ACE buying it. What we do is we help you by putting signs on it, telling you where the market is, and the timing of when you want to let it go is going to fit into that first question I asked. How long are you willing to hold that investment in that place? If you tell me I need to have it out in 3 years, I will work to see if I can find one to get you out in 3 years. If you're telling me it's 2 years, if you're telling me 1 year, not going to happen with ACE. Just not going to happen. And I'm being as candid as I can and as fair as I can. If you're looking at 5 to 7 years, it's possible that someone will come along and offer you money in advance of that. Right about a year ago, we had 4 people buy a parcel of land way north of Lancaster in Kern County, not even LA County. They bought 40 acres, and they bought it for, I want to say $15,000 an acre. And they thought they were going to hold on to it for at least 5-10 years. In 14 months, along came an offer for $22,000 an acre from a solar company, and they sold it in 14 months. So a 7 on 15 is a pretty good return in 18 months. I think it was around 41% return. They just happened to be at the right place at the right time with the right offer. But I would have never guessed that. When I saw the parcel, I would have never thought that was going to happen. But again, I didn't know whether the solar companies were out there or not.
So again, next question, or it's a repeat, but we stay a couple of 1,000 miles away from our property. How do we look after it and feel secure about our investment?
We look after it, and the security comes by coming and asking all the questions in advance, and making sure that when I ask you a question on a scale of 1 to 10, do you really want this or not? You give me your real answer. Not because I'm trying to sell it to you, but because I want to make sure you're positive about it. And then expect that if you work with me, I'm going to try and talk you out of the sale. Because I want you to be happy that you bought it. I want you to be delighted that we picked something good for you. I've actually talked people out of buying parcels, and then they come back and say they want it because they found out that it was a good deal. And because I don't want, on my watch, and the people that I work with, all I have is my reputation. And I've been in this business since the early 1980s. And I still do business with people from then and from 10 and 15 and 20 years ago. And ACE has that opportunity for me and for my colleagues. And I know I'm talking just kind of in general, but specifically each parcel has its own characteristics and own personality, and we can come up with a plan specifically for the parcel that someone wants to look at it to attend to those concerns and those possible risks. Again, there's no guarantee that the land is going to sell, but it will eventually sell And historically, land has always gone up, even through the tough times.
Next question is, how much percentage we can expect to increase in the value of land if we hold it for 8 to 10 years?
I would say put your number at 7 to 9% per year. That's what I would put it at. Because historically, when we look at the data in California, that's what's happened. You've had these huge increases, but across the board, it clicks across anywhere between 7 and 9% per year. Let me give you an example. In this area, houses went up 16 to 22% in Palmdale and Lancaster. 16 to 22% houses went up. And if we know that 50% of the value of a house is the land, then we know that the land went up about 8%. Just the land. So that's a pretty good indicator that it's still moving up. So a lot of this data we can crunch with individuals. And every parcel is a little different. For example, Ace sold a parcel across the street from Northrop Grumman, 40 acres, for $23,000, $24,000 an acre. The comps, unknown to the buyer at the time, averaged $51,000 per acre. And what the buyer didn't understand when they bought it, until they went into contract and we explained it, that 40 acres had an 18-inch pipe well with unlimited water on those 40 acres. That was a value beyond what they imagined was possible. And it was across the street from Northrop Grumman, and it shared a four-way signal with them. And they discovered they can break this 40 acres up into 10-acre parcels fairly easily. So when you see something like that, with those kinds of numbers, they could sell that property tomorrow for $30,000, $40,000 an acre. If they broke it up into 4/10s, they could probably sell it for $50,000, $60,000 an acre. If they broke it up into 2 acres and zoned it for retail commercial, which is possible, they could possibly sell it for $80,000 to $100,000 an acre. So it's a long answer to a short question. So it's back to you, Kishore. Other questions, Kishore? If someone wants to unmute themselves and ask me the question, I'll stand by.
Next question is, like, when you sell the land, do we need to pay the taxes?
Maybe. If you have it in a self-directed IRA, no. The capital gains all stay protected and deferred. If you sell it and you have a capital gain situation, you can roll it over into another 1031 exchange. Or you can gift it out and manage it. I imagine there's, among the people that are on this call, there's 51 participants. I imagine there's some accountants in there that can tell you how to protect that capital gains. And we can talk to them about that in detail. So it really is about managing your expectations at sale and timing that sale so that it fits into your desired outcomes. Next question.
Next question is, if ACE has to merge with a different company or if it goes bankrupt, is our property at risk?
Let's start with the first question. ACE is a privately held LLC that is owned and operated by Mr. and Mrs. Wang. They've been this way for 35 years. They have children that work in the office as executives, 2 of them. ACE will never be acquired or merged with anybody. It will stand alone. If ACE goes out of business, you are the owners of the land. You're not buying ACE. You're buying a parcel of land in which you are the owner so that you control its use and its sale and its destiny, not ACE. With respect to the services we're talking about, I will be around for at least another 5 years, unless my wife makes me quit working earlier or if I win the lotto. So even then, I'll probably keep working. But there will be associates that I work with, and there'll be you, and I'll always be here as a resource. As long as I'm alive, people can call me and say, hey, do you remember this happened on this day? What can we do about this now? And I'm easy to find. My phone numbers, and people found me from 40 years ago, so they can still find me today.
Yeah. Next question is like, if we buy a 5-acre parcel, can we sell it like 1 acre at one time? Or should
Yes,
we?
you can. If you decide, if you are the individual, you can break it up any way you want. And I can tell you how to do that and show you how to do that. And I cannot get into a contract to do that for you, but there are experts on the ground I can put you in touch with to do that. I can show you and you can do it yourself. And I'll be happy to sit on the side, but I can't work as a contractor for you to do that because there's a potential conflict with ACE. And I'm afraid that I don't have enough bandwidth with everything that I do. But you can break it up into 1 acre lots, depending on the zoning. In fact, those 40 that we sold across from Northrop Grumman can be broken up into 1 acre lots. The $784,000 parcel, 20 acres, can be broken up into 5s and 2s right now as it stands. And it's just a matter of hiring an engineer to survey it and then filing for the map to be recorded with the approval of the city. And those take some fees. They range anywhere from $3,000 to $12,000, depending on what you're doing.
And there are a few more questions like, can you refer some properties in New Jersey? Can you refer in Washington State? But I'm skipping those.
Yes, and you send those to me, and we'll talk about how we handle those. Yes.
Sure. And last question, or last but one, is there any way to get update on future parcels? Also,
Yes.
any parcel?
Yes. Yeah, the way it works is I'm going to send you a what we call an inventory inquiry or inventory request form, where we request the name, address, telephone number, email of the interested client. And on that same form, we ask you, Kishore, or your downlines or your uplines to put their name and information. And on that, there's little check marks. You can check whether it's 50 to 100,000 you're putting in, 100 to 200, 200 to 500, or over $1 million. It asks you to whether you want residential, commercial, industrial, or any of them. You can check all of them. And then I don't ask it, but I'm going to ask you because we talked about it. Tell us when you're ready to move and place those funds. And what I do is I keep all of those active on my desk. And when I see a parcel that matches, I send it out to that person and to the person that's listed as the HCI associate on the bottom half of that form. And it's a form, it's a PDF form, and I can send that to you tomorrow if you like, or tonight. I think it's better off we do it tomorrow. And then you can share that with everybody, and they just fill it out, email it to me, it hits me, and I keep inventory on that, and they send it, and I'll send you a copy every time I get one.
Sure. Extension to that question is also for any parcel cost we pay, will that be the market cost for which we are purchasing? Or
No.
does ACE put some cost of business on the parcel cost?
The way ACE prices its parcels is we have a buy price that we got it at, and then we put our operational cost on it, and then a profit on top of that. If that formula creates a parcel that is below market, from anywhere from 10 to 50, 60% below market, we offer it to the clients. If it's above retail, you'll never see it because we're never going to buy it. It doesn't make sense to sell you something retail. If we do that, I may as well just be a broker. We're not giving you land banking value added opportunities. I know that's an overuse, but if you're not making money on the buy, why do that? It doesn't make any sense. And you don't go broke making a profit. So we always want to create the opportunity to make a profit.
Yeah. If I am unable to afford a piece in a parcel in which I am really interested, what is the way to go? Like maybe
you tell me what parcel you're interested in, and I can try and find other people to join you, or to collectively, everybody on this call can work together and buy one. So if 5, 10 people, 20 people wanted to buy the $784,000 parcel, we can break that up into 5, 10, 20 parts. And everybody can contribute the same amount or different amounts. As long as the 784 is covered, it goes to that group. You can do that as individuals. You can do that as companies. You can have you can set up an LLC to take control that way. And that limited liability corporation operating agreement can determine how all that's going to be split, if you like. But certainly, that's what the tenants in common are for.
Cool. Yeah, another question is, to buy, should we visit the property?
Personally, I like to see everything that I buy. So I always go. But there are some people that never go, or they buy it and then they go to it afterward. You know Raghu Reddy, right?
Yeah.
Raghu bought sight unseen and he came to see it. And then we took him out there. He says, man, this is out in the middle of nowhere. Oh my God. And I couldn't find it at first. I had to find the GPS to locate it because I hadn't seen it before. So we drive out there and I'm thinking, uh-oh, he's not going to be happy because we can't find it. And it's out here in this area. And I know it's a good deal because price-wise, it was a really good deal. The numbers didn't lie. So we drive back down and we find it. And we drive south and we get on Highway 138 and we head west. And not even 3/4 of a mile away, we pull into these rural lots. And there's a house for sale on the corner. So Raghu gets out of the car and pulls the sheet out for that house. And he discovers that house is asking over $450,000 for the house on a 2-acre lot. Now Raghu bought a 10-acre lot that he can divide into 2-acre lots.
Yeah.
And then when I showed Raghu his parcel, I think we sold it to him for about $92,000. There was a parcel just north of it that sold 2 months before Raghu bought his, that sold for $120,000. So we had a direct comparison on a value buy for him. Now, will he have to wait a little bit? So his strategy, I told him, I said, you know what you need to do is you need to stick a sign on your property or online that says 2-acre lots available and put them out at market price. And you get all your money plus profit a little bit at a time. And he just told me a couple of months ago, sell it for me that way. So that's his exit strategy. And he bought it about a year ago. I didn't think it was going to happen that quickly for him, but there's activity out there.
So there is a question about HGI. What is HGI? So if anyone would like to know about HGI, they can contact me on 832-867-8808. So HGI is basically like Amazon of financial services. It is affiliated with 140 plus companies. So yeah, you can call me later and I'll explain you more details about HGI. And next question, which parcel does Lou would suggest or feel will have high returns in short time?
Well, when are you going to buy it? When are you going to buy it? See, the easiest thing to do is see, I got to match it with what you're putting in. Because if you know, of the 3 that I showed you, we've got about 18 of them right now and more coming. And we've got a team selling in China, so some of these are going to sell. There was one that was a steal that I just sold. It was a 23-acre piece that is going to close next month for $1.4 million. And that one should really sell for almost $2 million. And a builder developer came in and they're going to be building 20 or 21 luxury homes on there, and they're going to be selling each of those acres for almost $300,000 an acre. And they got it for $63,000 an acre. And they're taking steps to make that happen. If they just held it and they sold it next year, they could probably sell it for $100,000 an acre without any problem.
The questions are still coming up.
So I was going to say, yeah, Kishore, on that one, let me be really clear. Which one would I recommend? depends on the amount of money and the person and how quickly they act. I just want to be really clear on that. So we can work one-on-one on that.
Yeah. Next question is like in 5-acre parcel, if it is bought by 5 different persons or 5 different friends, if I buy 1 acre, then that piece of land can be registered on my name, or that 5 acres should be on registered on all the 5 members.
The way it first starts is you buy it all together and it's registered with all of you from ACE. And then you have an agreement that when you record it, you agree which acre belongs to you, but you got to make sure you can break that up. There's a long detailed answer that I can give you offline on that one, but it can be done, but we must comply with the California MAP Act. And I can show you how we do that so you don't cross your wires and we're in full compliance with the law. But yes, you can do that. But you have to decide, if it's a 5-acre piece and it's rectangular, you have to decide who's got the corner and who doesn't have the corner. So that's all worked out between the 5 people.
Okay. And anybody can sell at any time, right? So if I can do that.
Yes, and you can write the agreement too, so that if one of those 5 wants to sell and the other 4 don't want to sell, that person would give first right of refusal to the other 4. So if each of them bought for say $10,000 each, right, for $50,000, and this person said, no, you know what, I'm going to sell mine because someone is offering me $15,000. They have to let the other 4 know that they got a bona fide offer for $15,000. And these 4, any one of them or all of them can buy it. And that gives this person their $15,000. If these people say no, then they can sell it for $15,000. This person comes over and they only have 1/5. Even though they paid $15,000, they only have 1/5 interest in the land, if they're all equal. Okay. I'll get into the details when we get to that one. Mm-hmm.
Yeah, sure. Last question. When we sell, what percentage would be allocated for expenses?
If you sell through a broker, typically they're 4 to 8%. That's by the way, in California, every commission is negotiable. If you hear from a real estate agent in California, well, I'm sorry, it's customary, or it's our rules that we get 5 or 10% on these types of deals no matter what, find another broker or agent. It's all negotiable. So that's one thing that's a cost. The other cost is your closing costs, and those are connected to how you negotiate who pays for the title insurance on that and anything else that comes along with title. So typically about 1.5% is what you're looking at on the sale. No more than that. If you want to go into those, we can do a cost estimate so you know exactly what it is at any time in the future. You can get those estimates from any escrow or title or any reputable experienced agent should be able to get that for you.
I think that's it with all the questions, Lou. Let me unmute everyone, and if someone has any other questions or
wow, we got a party going on.
Maybe, yeah, you can unmute yourself. But yeah, thanks a lot, Lou. Lot of valuable information. Let me unmute you. Yeah, now we can hear you.
Yeah, Kishore and everybody, thank you for your attention, for your time and your energy. Kishore, congratulations. It's been an honor and pleasure to work with you on this. I can tell you that I have had several of these, and you've put together the second largest group for a Zoom video for us. And I'm going to do everything I can to make it valuable for you and everybody that's on board because of your effort. I would do that anyway, but I want to express that to you for the level of trust that you put into sharing this information with your associates and with your community. And with that, I'll say good night. Feel free to call me or email me. And I will do my best to respond to calls as quickly as I can. But Kishore, you know I've been busy, and I'll stay busy. All right, but I will stay in contact. And if people want to visit, we'll coordinate through you. And I can tell you that if someone submits a reservation form with a deposit and they wish to visit the land, I will meet them there. I can do that. And if a group want to come, I just need to make sure that I have one reservation form with one deposit for me to go. So if 5 or 10 people want to go, great. If there are more than that, we can coordinate a bus and a tour of all the available parcels and offer you our corporate rate at a hotel in that area so that you can take care of that. But ACE does not cover those costs, but I'll be happy to buy lunches and dinners.
Cool. Nice of
All
you.
right. All right.
Yeah. One last question. After
Yes.
the 3% is paid, does ACE provide any travel expenses to visit the parcel we paid for?
No, actually, we each pay our own way. Yeah. Now, let me say this. If the purchase is large enough, I will ask Mr. and Mrs. Wang for a gift to that person. And it's hard to resist when someone buys a valuable parcel for them. And they'll occasionally do that, but they just want to know. Imagine that we get that type of request every day. And if they were paying for everybody's costs, we'd be charging more. We certainly will consider covering someone's business costs to visit it if they purchased it. And that's on a case-by-case basis. We can certainly, I may consider that as well. It's really, let's make a deal work and do some business now and into the future.
Sure, Lou. Yeah. Thanks a lot, Lou.
You're quite welcome. Blessings to everybody and good night. And thank you again. Take care.
Thanks, everyone. Good night. Good night.
Good night. Good night.